Hey traders, welcome to Charts and Coffee. Hope everyone had a great weekend. Got away from the charts for a little bit, but we are back at it. Yesterday on 60 Minutes, Jerome Powell, I usually don't spend any time. I try to avoid the news. However, it's interesting on a Sunday evening, 7 p.m. so Eastern, so the Asian session is up and going. And Jerome Powell hits the airwaves. And it's really interesting. You can see a good bit of weakness after 7 p.m. on the intraday chart. So actually, I'll show it to you because I was watching 60 Minutes with my husband, and I said, "Watch this," and I pulled up the S&P. And see, only traders can have fun like this while watching television, right? So it was it was a little bit of a loop-de-loop all over the place. And here it is. Let's see, Friday. Let's see, there we go. So this would have been yesterday. And right around 7, this is right there, that candle right there with a little pink arrow above it, right there. That was the move. That was the move when 60 Minutes began. He was the first segment. Not that it necessarily matters, but you can see that there was a little bit of weakness that happened with that hot zone. Now, why do I bring that up? We are trading below the previous session close this morning. Is it Jerome's fault? No. What's really interesting is that Fed Fund futures target rate probabilities have been pointing to a hold in March now for almost 3 weeks. And this is not something that, these are not fixed things. Macro is not fixed. It's every little bit of data. It's every time we hear from the Federal Reserve, we get a little bit more insight into what could happen. He was very clearly dovish. Just he doesn't know when they're going to start. And guess what? Neither do we. But is this the kind of time where we see new highs in the indices, new highs in many stocks, highs in a lot of the important heavily weighted sectors? Is this the time to start picking a top? I guess if you want to grab attention, right? If for lacking anything else, the markets are going up and are going to keep going up, that's a pretty boring message. That's been my message for 14 months. Pretty boring. And yet, if you want to be clickbait, if I were to want to get your attention right now, I'd say, oh, this is the top and the Federal Reserve has no idea what they're doing. And da, da, da. Do you see the difference between trading what we see and trading what we think? But I thought it was pretty interesting that Powell had those comments. He was not in any way saying that they are not indicating they're going to cut rates. It's just they don't know when, and they want to be really careful, and they're not waiting for 2%. So kind of interesting segment there. And anytime we get messaging, and I'll have to give Scott, what's his name, Scott Pelley, a lot of credit. He asked very plain questions. He didn't ask tough questions, but he did ask very plain questions. And I thought it was quite interesting, Jerome's response. He didn't hedge a lot. That being said, we had a wild candle on the 2nd, and we're getting a little bit of a pullback today. It's an inside day. If you've never heard that phrase before, some of you that are Japanese candlesticks fans, it's a harami, same thing. It's an inside candle. We're trading within the high to low range of the previous candle, and that's a huge candle. That's not saying much. The candle from the 2nd was a monstrous candle, and we're sitting basically in the middle of that. Is this a sell-off? No. But it is notable that the previous session close was at 49.72 and 3/4. And by being below 49.72 and 3/4, we're starting the morning, although who knows where we'll be in 25 minutes. Let me get the clock up here. There we go. Who knows where we'll be in 25 minutes. But for now, we are sitting just below that previous session close. That's in the bearish hemisphere to start our morning of day trades. All right. So that's what we've got coming up. Now, the other market, the other symbol that I was looking at was bonds. And if you take a look at bonds around 7 p.m., you'll see they did something pretty similar. Bonds are moving lower. If anyone said, gosh, we don't really like what Powell had to say, it was probably bonds for a few reasons. One, if we don't have a clear trajectory to the first rate cut. We don't have a clear trajectory to lower yields, but we're definitely heading in that direction. And if we ultimately are looking at the way in which bonds are reacting to Powell, looks like we're going to come back and test the 200 and likely the lower end of the daily price movement range, which is pretty cool. And if you take a look, this is just my plea once again to ask traders not to buy into higher highs, especially within the context of a non-trending environment. Am I bullish bonds? Yeah, but as always, as I like to say, I want to buy from lower, or the trigger hasn't reached yet because we haven't hit a level of exhaustion, which is another way of saying support in the context of an overall bullish environment. Okay, so I was kind of bummed. So that sign that's sitting right there over my head, that actually says charts and coffee. My baby sister got me that sign. It just doesn't quite show up in the show here. Okay, so let's as always get to the questions, gang. Best part of our show, and let's kick it off. Don't be shy. This is the perfect time to ask. Not at 9:19. 9:07 is a great time to type in those questions. And if you want to join us for analysis like this, how do we keep an even keel, data-driven rate of change view of macro, which sadly is a rare thing. You can check out what we're doing over at the Sector Secrets Mastery. I was just checking out the January trades, of which we had 20 swings that triggered and a handful more that didn't, but had they, would have followed through pretty nicely. But, close isn't enough. But yeah, looking at our trades from January right now, we'll have the trades vids for you all coming up this week. I'm super stoked about that. Take a look into those 20 swings. So that does not count our day trading. That's just our overnight swings. So looking forward to sharing those results with you all this week. Okay, next up is TA says the Fed never shows its hand. I won't say they tip the cards, right? They can't paint themselves into a corner. People say, why doesn't the Fed just say what they're going to do? It doesn't work that way, right? They're trying to manage expectations. They are trying to respond to the data. He was really frank about that. He was very clear. He was very, like I said, he didn't hedge his words. He was very clear about what they want to see, and that before they start to cut, they probably want to see the March data. They want to see the February data, the March data. They'll have the April data before they cut in May. But they'll probably indicate a lot of that in the March statement. And they better sound dovish in that March statement too. That's really far away. But yeah, they can't tip their hand, right? They've got to think about the data that they don't know yet, right? But they definitely will not paint themselves into a corner. All right, NASDAQ. What are my thoughts? Well, I trade what I see, not what I think. In terms of the 5-minute, I'm looking to be a buyer off the hourly price movement range. In terms of the 1 hour, I want to be a buyer off the daily price movement range. And in terms of the daily, it's the same zone. I'd like to be a buyer off the daily price movement range. I want a bit of a pullback, right? That's always what I'm looking for. I'm not looking to buy into higher highs. I know a lot of folks like to do that. I'd say 90% of market participants like to buy into higher highs. Funny, that's probably about the same number of folks who struggle with trading. So maybe sometimes we have to ask ourselves, what is everyone doing? And is doing that really going to get me where I want to go when I hear stats like most traders don't do well in trading? By the way, most traders don't do well in trading because they don't educate themselves. They don't understand position sizing. They don't have a repeatable sequence that's been time tested. They're just watching the news, following meme stocks, and buying gaps up. I mean, I'm only slightly kidding, right? Most traders are going to ask about stocks that are up. Most traders are going to ask about things that have gapped up. In other words, everything's already happened, and now they want to know how to engage. And then we wonder why most of the public is so frustrated by Wall Street, by trading, and think it must be rigged, rather than looking in the mirror and say, gosh, what am I maybe doing wrong, right? There are plenty of people who are able to look at these charts and say, not every move is for me. and there's got to be a sequence. There's got to be some risk management. We don't just get to chase higher highs. So there's nothing I can do here until those lower lows come into focus. All right. And that NQ, by the way, is going to map to QQQ. Those of you that may trade NDX, I do not. But that's going to map to that. Nvidia. Well, this is one of those situations where it went up. It went up. I mean, now what? You know what I'm going to say, right? If you've been following me for any length of time, I need either what time frame are you engaging, right? What time frame are you engaging? Daily time frame, hourly time frame, etc. And then if we look at where we sit right now, nothing to do here. It's already happened. It's already happened, right? It's been happening. This is what kills me, gang. This really hurts my heart. Okay. If someone's got their eye on Nvidia, and please have a steady list of stocks that you look at consistently, right? That's the only way to catch these kinds of moves. How long has Nvidia been bouncing along the daily price movement range? All month long. So on the 5th of February, it's already happened. The bulk of it has already happened. Could it keep going higher? Maybe. Now we're really looking at earnings that are about, 2 weeks away? So the bulk of it's already happened. So then I'll say, what has been the repeating pattern that if it were to happen again, we could take advantage of? Look at how many green grab candles, green is bullish, within a green trend down in here have been bouncing off the gray area. And it's like garanimals, match up the colors, right? I have no idea what's going to happen with Nvidia up at 682, but that's not the point. It's a brand new ballistic, crazy, parabolic high. We got to ask ourselves what was upstream to that. And believe me, gang, I know that's not, sorry, I feel like I'm going to sneeze. I don't want to. I think the challenge for most traders is that they are looking at a stock after it's made a big move, right? Nvidia should be something that's on everyone's radar. It's one of the Magnificent Seven. It's number one weighted in semiconductors. So put things on the radar consistently, in which case, Juju, you're probably already in, right? All right. Can I please look at Starbucks on the daily? Thank you, JJ, for the specificity. All right. We're looking at Starbucks trading at, I should just sneeze already. We're looking at Starbucks trading at 93 right about now. Gosh, of all the things I could trade, JJ, this would be one I'm bearish. Right? I just want to focus on the short side for really two really obvious reasons that I think everyone can see. We're below the dots, which is to say we're in the bearish hemisphere of the chart. You look at the daily time frame, you look at the 200 propulsion, we're in the bearish hemisphere. All right. The second thing is look at the color of the candles. They're all red. So when I think about structure, those red candles tell me that those are more bearish, right? And the trend that preceded what is for now a sideways market, the trend that came before now was a downtrend. So I'm very bearish. So that then flips the script. When I have green candles, as we were talking earlier with Juju, when we had green candles, I want to focus on the gray zone. Green is bullish, gray is support. But when I have red candles, I'm focused on the gold zone. Gold is resistance. Gold is resistance. So I want to go red candles, gold zone, and then look for long puts or short the stock if that's what you want to do. All right. So very different place. Nvidia is a fantastic uptrend, has been, for many, many, many weeks. We could argue Starbucks is a pretty darn good bearish trend, downtrend. It had its moment with earnings and it came right back to what it was doing before. All right. Okay. So Paulie asks how to work out a stop with futures rather than options. How do you work out a stop loss with futures rather than options? How do you work out a stop loss? Oh, if you're futures trading, where's your stop going to be? I don't understand the question, Paulie. How to work out a stop loss of futures rather than when you're trading options? I think if I'm reading your question correctly, Paulie, I would say ask yourself where the trade is no longer valid. All right. Now, when it comes to options trading, of course, there are price-based levels, etc. Tell him, in terms of telling myself, all right, tell myself when I start a trade, where is it valid? Is it a trend? Is it chop? If a certain price level is broken, is it no longer valid? So I would say use price. Okay. I would say use price. All right. Um, and then for folks in the Sector Secrets Mastery, we use a spreadsheet where you type in your account value. And in that spreadsheet, it starts to spit out budget and risk. And those budgets and risk are going to be based on a certain amount of risk to the account. And so I would start with maybe risk to the account. Okay. Jan Tran, I had PLTR short and long term. If I have time, as long as it stays above the 200, great. That's going to at least put you in the bullish hemisphere. I don't want to short things as a general rule when they're above the 200. If you're looking short and long term, again, I don't know what short means to, is that a 1 hour, is it a 5 minute, is it daily? Is the daily short term and the weekly is long term? I do not know. But that being said, I would remain bullish, but it depends on where you're bullish from, right? And this is the thing that I try to remind traders and investors too. People say, well, it doesn't matter the price when I'm investing. I'm in it for the long haul. Of course it does, right? Buying close to 200 puts you in spots like this. Most traders are going to do this. Now, I'm not saying that's what you did at all, my friend, but most traders do that. And it's the absolute wrong thing to do. If you think something's going higher, wait for it to go on sale. Then that's value. If something's going lower and it goes lower still, that's not value, right? And that's a tricky thing, but that's all really reliant on making sure that structure dictates strategy. I would stick with the long side. Again, depending on where your cost basis is, I wouldn't be bearish. It's just, of all the things I could put money into, I'm not sure this would be the place to go. But again, I'm sure you have your reasons. You're looking long term. That might be a better chart to look at on a weekly. All right. Okay. Let's see. Next up is Reynard's asking, can I explain the difference between multi-trend and the new structure? I'm going to get into that in the next few weeks, Reynard. I don't want to get into it in Charts and Coffee because it's definitely not enough time to do it and not the right place. But I will tell you, it's a completely rebuilt way of looking at momentum trend. And we did not just stop at the multi. We rebuilt the candles. We rebuilt the propulsion. We rebuilt the what we call the wave. We rebuilt everything. And it has a lot to do with, probably the why is the most interesting part of it, if you wouldn't mind me saying. The why is the most interesting. Why after 30 years change something? Because modern markets are driven by different catalysts than the markets were when I started this in the late 80s, in the early 90s. So even the slow stochastic is rebuilt. So we rebuilt everything, asking ourselves, when my win rate starts to drop, or when I have a losing trade, or when I put in an aggressive trade and it didn't hold, when those kinds of things happen often enough, I ask myself first, am I following my sequence? And then I ask myself, is my indicator looking at the data that's moving market sentiment, momentum, and trend? And after asking that for some time over the past year, I realized that modern markets have catalysts that markets even 5 years ago didn't have, namely the speed and the activity of algorithms, but probably even more so 0 days to expiration options. And this is probably the biggest shift in my trading that I've made in 3 decades. It's not a philosophical shift. It's not in any way saying that what I used to do doesn't work. It's saying, let's take what I used to do and have been doing for 30 years and just have it measure the things that matter and give me the same information. Where is dynamic support and resistance? What is overbought and oversold? What is the structure of the market? So answering the same questions, but frankly, in a better way. All right, gang. And just like that, That 20 minutes flies by. All right, gang, as always, get those questions in early. I just go right down the line, and I will see you all tomorrow. Same time, same station. Be good to each other, gang.